so that now we've had this meeting so that you guys are able to say then what to do then after this information has been shared with yourself and then with the NHFC BEE initiatives that the NHFC has engaged in. Then we're just basically going to highlight a case study that the NHFC has funded a Black entrepreneur and then has been able to grow over a period of time. Okay, you can move on to the next stage. Okay, just basically on the NHFC overview, the NHFC was established by the Department of Human Settlements in the year 1996 with the basic mandate of making sure that we provide shelter or are able to facilitate access to housing finance activities within the human settlements area. So the NHFC is a developmental finance institution. It's 100% owned by the South African government through the Department of Human Settlements. Our total assets as at the audit date of the 31st of March 2020 was sitting at about 6.3 billion with total liabilities of 1.6 million. So our funding status is that we are self-sustaining, meaning that whatever that the NHFC lends out, it must be able to recoup and then be able to then resuscitate the same funding to on-lend to other people. We are serving the South African household, making sure that their evolving need of access to affordable housing finance is met. So we operate nationally. We have a staff complement of about 119 employees. Okay, move on, please. Okay, about us. So as I've said that the NHFC, it's a state-owned company. It's a Schedule 3A in the PFMA. We support the housing delivery through the provision of affordable housing finance. Our target market is basically people that are earning between 800 Rand up to 22,000 Rand. That is what the NHFC considers the low to middle income household. So effective from the 1st of October, the NHFC merged with the Rural Housing Loan Fund, which had a focus for providing funding for the rural areas, and the National Urban Reconstruction Housing Agency, which was NECHA. They were merged together with the NHFC with the mandate to ensure that the Human Settlement Development Bank is formed after that. So this merger was a very important step towards the formation of the Human Settlements Development Bank. So the NHFC then, or the Human Settlements Development Bank, will have to aim to deliver sustained and equitable and accessible value creation by effectively and efficiently providing quality funding and financial support for the development of integrated human settlements throughout the South African households. Okay, so these are just basically the timelines that the NHFC was established in 1996, and then in 2018 there was a merger of RALF and NECHA towards the formation of the Human Settlements Development Bank. Okay, move on, please. Okay, basically this is the reason why we are here. It's just to make sure that we provide knowledge about the NHFC's product offering. So these are all the product offering that are available at the NHFC, should the interest be that anybody wishes to make an application to the NHFC. The first product is the social housing finance. The social housing finance, it's done in conjunction with the SHRA, the Social Housing Regulatory Authority. Basically, it's a form of subsidized rental that is provided through SHIs and ODAs. SHIs are basically social housing institutions, and then ODAs are other delivery agents. The difference between the two is that the other one is more private, while the other one is an NPC, strictly for NPC to register an SHI. And then if you're a private entity, then you'll go the ODA route. The difference also is that there is a 20% requirement of equity if you're a private ODA. So that's where the SHRA will basically accredit an SHI that has met their condition to say that, okay, you're an NPC and you're meeting all the requirements to be able to get this consolidated subsidy grant. It depends on the amount or the type of project that you are able to do. You can be able to, per unit, you basically are able to get a subsidy grant of about 270,000, and then the NHFC is basically able to provide debt funding of about 30%, or it ranges from about 120K per unit to be able to then deliver these subsidized units. The basic aim is to make sure that the households that are earning between 1,500 and up to 15,000 Rand are able to be provided with affordable rental accommodation. So the NHFC in that instance then provides debt funding of about 35%, while the SHRA will provide the grant funding of about 65 to 70%, depending on the total development cost per unit for that particular project. So that the first one is just basically subsidized rental for people that are earning below 15,000 rand, and then the NHFC is then able to provide debt funding for such a sector. The following one is private rental. Private rental, that is where a developer has identified a piece of land. Most commonly, it will either be close to a university or in the CBD. So you identify probably an office block that is in need of renovation or refurbishment, and then thereafter, you can say, okay, NHFC have been able to acquire this building block. Now I would like to access funding so that I can either construct from scratch if it's a greenfield, or you are able to then refurbish that particular building stock and then be able to offer it either for student accommodation or purely for private rental. So the NHFC is basically able to provide funding for both. The NHFC, again, the funding that would be exposed to such an entity, the NHFC would provide 80% debt funding, and the developer then would be required to say raise about 20% equity towards the provision of that development. Okay, the following one is subsidy housing finance and affordable housing. So subsidy housing finance, that's where you are a contractor, you've been awarded a tender by government, local or provincial or national in other instances, to say, please go and construct RTP, 100 RTP, 50 RTP houses. Then you come to the NHFC to say, NHFC, look, I've been given such a tender. I would like them to access funding so that I can be able to kickstart this project. And then on successful delivery of a certain milestone, the department, or in other instances, it is the private sector in other instances, like mining houses that do provide housing services for their employees. So the NHFC is able to provide that bridging finance for people that have won tenders for the provision of human settlements within the affordable market space. Again, there's affordable housing finance, which is also another bridging finance program. Again, you are a developer, you've identified a piece of land, you've identified that there is a demand in a certain area, then you'd like NHFC to give you bridging finance so that you can build the houses and then on-sell these houses. These houses can either be sectional title units or full title units, so that it's either freestanding or within an apartment. So then you are able to use the finance that you can access from the NHFC to go and construct, and then you sell these units off. In that instances, the NHFC is also able to provide funding for the internal services in situation where that is required. Okay. The following one is strategic partnerships and investment. So that's where basically the NHFC works closely with investors and offers program management, program and fund management. And then in such instances where the project is substantial in size, the NHFC is able to provide equity for such projects so that it can be able to leverage funding from other private investors to be able to make sure that projects that are substantial in size, where you find that probably over 1,000 units that need to be delivered. So the NHFC is able then to provide strategic investment through equity in such instances where the size of the project warrants the NHFC to provide equity. Okay, the following one is incremental housing finance. Incremental housing finance, it's aimed towards micro lenders. So you're a micro lender, you are registered with the NCR, you are basically in the business of on-lending funds to people that want to improve their housing conditions, either in the urban areas or in the rural areas. So you find that the most common use of such funds, it's people want to improve their housing conditions either by extending, by putting a fence around their yard, by either roofing the house, or any incremental improvement that is done to the house. In other instances, you find people using such funding for putting in built-in cupboards within a house. So any fixed improvement to the house would be considered incremental. So the NHFC is then able to lend out to these micro lenders that are in the business of lending out funding for, or lending out loans to people that want to improve their housing condition. So the NHFC as a wholesale financial institution then is able to borrow to an intermediary or a micro lender to say, okay, take a facility of X amount that you can then be used to on lend. And then another product is finance linked individual subsidy program. So that's where basically the NHFC is saying, we've seen that there's a need in the market to make sure that people are able to improve their affordability level so that they can be able to afford their bond financing requirements. So the NHFC has a table that it uses to say that for somebody that is earning between probably 10,000 to about 12,000, you can probably be able to get yourself a grant of about 60,000. So it is a cascading model that says that if you are within a certain gap to a certain gap, you get X amount grant that you can be able to use to improve your affordability level to qualify for a grant, to qualify for a bond. So this one is finance linked. You cannot be able to access it without having been approved by a financial institution for a mortgage loan. The last one is program and fund management. This one is aimed more towards municipalities that are in need of an implementing agent that is able to fund manage and then be able to share skills with that particular developer that have probably been appointed. It's also similar to what the HDA does offer. It's program and fund management, or the NHFC then is able to assist the municipalities or implementing agents to be able to successfully deliver on their project. Okay, Luciba, you can move on. All right, so these are just basically the product offering that are currently on offer to the NHFC. So to the left of the screen, you would see that the NHFC is a financier, so we are able to provide debt, equity, and quasi-equity that is tailor-made for each and every sector. And then in addition to that, we also offer fund management, which is a management of third parties. So where the NHFC is basically managing party funds, either a municipality or a provincial government, in the delivery of sustainable human settlements. So as we move towards the formation of the Human Settlements Development Bank, this is where the NHFC is saying that basically we need to move over and above what we are currently offering, and then offer things like mortgage default insurance, which is an insurance probably if you've bought a home, so that you are not able to lose your home in the event that you are retrenched, and providing guarantees and other services that may be needed by the sector as and when time goes on. So we'll also be able to provide coordination, promotion, advocacy, and be able to provide technical assistance in areas where this would be needed. So those that are within the dotted red line are currently not available, but as we move towards the HSDB, such will be on offer. So the commentary is just basically then giving it in more detail to say, what do we mean when you say advocacy? And it goes into detail about guarantee, what a guarantee is towards the NHFC. And we'll also share these slides, but we'll be happy to move backwards as when question arise where we need to explain in detail. Okay, please move on, Luciva. Okay, so the aims of the HSDB. So it's just to make sure that we maximize our developmental impact. So we need to make sure that with the funding that is currently available at the NHFC, we maximize the use thereof and are able to make sure that we leverage. Based on the little funding that we have, we are able to enable developers that have been funded by the NHFC to then be able to be independent and be able to go onto the market and be able to access further funding so that they can be able to deliver on their mandates, be able to deliver more housing stock that they can be able to either rent out or sell to the public. And another aim of the HSDB is to transform the human settlements sector. So it's to make sure that there's participation of the youth, of the women, and other Black-owned entities so that we are able to see a more diversified human settlements or the property sector that is inclusive of all the participants and stakeholders that would like to be players in the sector. So another aim to the HSDB is additionality. So it's just to make sure that each and every cycle that the NHFC or the HSDB will face, we are able to make sure that the market is able to be adequately served. If there's any innovation that can be put forward, the NHFC is basically able to provide funding for such and also achieve sustainability. So it's to make sure that whatever funding that we have lended out to the open market, we are able to make sure that we recoup it so that the next person that would like to grow in the sector is able to access funding from the sector and then be able to leverage and grow using the NHFC funding. Okay, you can move on, Luciba. This is just basically the application process and the criteria that is required to be able to access funding from the NHFC. So it's just basically on the preliminary stage, we're just basically looking for a high-level proposal. I, Lindo, have a property development house that I would like to build 50 units that I will be renting off, that I would be selling it, selling or renting to student accommodation. So you just basically give a high level proposal. What do you want to do with the funding that you would be accessing from the NHFC? The next one is project developmental viability. It's just basically a cash flow model for your particular development. You will be incurring a total capital outlay of about 120 million, but you'll be generating an income of X amounts, just to make sure that the basic accounting principle, income and revenue, expense and revenue, that it makes sense, your development makes sense, the CIPC registration of the particular entity, and then independently reviewed or audited financial statements. In this instance, we do understand that probably if it's a startup, this would not be present. So, it's not a mandatory requirement. It's where it's available, it must be provided to the NHFC. The next one is a market study to say that, look, whatever development that you are providing to the market, there must be adequate demand to support what you are offering to the market. The BEE certification, that one is an easy one. If you're a startup, obviously, it's going to be a sworn affidavit. If you've been operating for quite some time and you've got an annual turnover more than 10 million, it will be a BEE certificate. So CV of the key personnel. So if you probably are having a governance structure, that's where such would come in to say that you've assembled a team of professional architects, civil engineer, quantity surveyors, and so on. So this is just basically the application process. Once we've been given this information, then we are able to make sure that we appraise the particular application and are able to indicate if it's viable. Once we've applied our parameters in appraising the particular development, we'll be able to say, okay, at this stage it's not viable, or it is viable. If it's viable, then we move on to the full appraisal. Full appraisal has a full detailed due diligence that is undertaken by the credit, legal, and lending division. So it takes typically about 10 days, depending on the information being available. And then depending on the amount of a loan that is required, then it moves on to the sanctioning. It can either be approved by our CEO if it's below 15 million, and then by our Management, Credit and Investment Committee, MCIC, if it's below 15 million, and then by the BCIC if it's below 150 million, or if it's over that, then it has to go through to our board. So thereafter, if you've been approved, then you move on to the disbursement of funds. So the funds disbursement, it depends on the amount of loan that you're looking for. It can typically take anything between 6 and 12 months, but if the loan amount that you require, probably it's about 50 million, the turnaround time can be within a month or two, depending on the loan amount that you require and the information being available to the NHFC to be able to appraise your particular development. Okay, please move on, Lucida. Okay, so now these are the BEE initiative. Probably this is one of the prompt for myself to have approached the EPA to say that, look, the NHFC wants to make sure that the sector is transformed. So therefore, we need to partner with youth agencies like EPA to make sure that more youth are able to participate in the sector. The youth can also include women, it can also include Black people. So it's making sure that we are able to make sure that we disperse funds to previously disadvantaged individuals. As you'll see in my next slides, it's the NHFC then setting aside a certain amount of money of its disbursement to say that we've set aside 30% of all disbursement that the NHFC that would make, it must be made to women and youth entities. So that's why we need to partner with the youth and then be able to make sure that their projects are sustainable and then are able to access funding from the NHFC so that we are able to achieve the transformation of the sector that we so desire. So 35% of all disbursement must be made towards BEE entities. Please move on, Lucida. All right. So this is the slide then that relates to the previous slide. So over the next medium-term expenditure framework, the NHFC is therefore committing that 845 of all of its disbursement must be towards BEE entrepreneurs. Included in that 845 is the setting aside of about 724 million over the next three-year period being made towards the women and youth enterprise. So over the past few years, this is how much the NHFC has been able to deliver. In the 2019-2020 financial year, approximately 566 million was disbursed to the BEE entrepreneurs, which include women and youth entrepreneurs. It was either in the rental housing, social housing, incremental housing, or subsidy housing finance. So we need to make sure then to meet this budget of about 845 million that we engage more youth and are able to make sure that they know the requirements of the NHFC and are therefore able to make applications so they can be able to deliver on this budget that has been set aside. Okay, please move on. Okay, so these are the initiatives that the NHFC has participated in. It just goes into detail to say that the NHFC has participated in the empowerment partnerships with the GPF, where long-term was availed to 20 BEE entrepreneurs, of which 5 of those were women-led, and then received approximately 84 million. So we're saying that is not enough. We need to make sure that we always go over and beyond and are able to meet the budget that has been set aside in our APP for the next couple of years. So we also supported Black-led SHI. So just basically the milestones that we've been able to achieve as the NHFC in transforming the sector. So we have been able to assist where there's been a boycott and hijacking of building. We've been able to give COVID-19 relief where it's been applied for 4 times development funding to funding loans to women entities in the past 12 months. We've considerably not done enough towards the youth, I must confess, but that's why we're engaging yourselves to make sure that we are able to improve that standing. So it's just basically highlighting the initiatives that the NHFC has participated in and the success thereof. Okay, please move on. All right, so this slide is basically highlighting then things or initiatives that are permitted under our credit policy, to say that the NHFC is able to permit up to 150 million loan to entities that are able to provide partial security of loans. So probably you can approach the NHFC saying that, look, NHFC, we are a youth-owned entity, would like to access funding, but probably we do not fulfill all the requirements. Probably you're not having adequate equity, then the NHFC could be able to say, let us entertain your loan because you've not been probably able to provide the full amount of security that is required. Then you can be able to access loans of up to 150 million, depending obviously on the feasibility of the project thereon. Okay. For contractors that have been awarded a tender by government or the private sector, no tangible security is required. So you would not be required, if you've been awarded a tender and you're a youth-owned entity, you would not be required to provide any tangible securities. In instances where people require a loan that is in excess of 15 million rand, there is a requirement to say, okay, provide tangible security. Tangible security can be a bank guarantee, it can be a piece of land, but in instances where you've been awarded a tender, we're saying as the NHFC, this is a soft spot for you to be able to access funding from the NHFC to be able to access bridging finance. Okay. In addition to that, the NHFC offers junior funding, which creates an opportunity for youth-owned entities to potentially reduce the amount of equity that is required. It is more flexible in terms of the repayment. You probably would find that payment is only required on a 3 months period or 6 months, depending on the structure of that facility that is being made available. So this is junior funding. Probably the NHFC can be able to be a senior funder and a junior funder. So this junior funding then could potentially require that the equity that you contribute to the project is not going to be substantial. In other instances, you'd find that typically the NHFC would require 20% of equity. So in such instances where the NHFC has offered debt funding, which is mezzanine or junior funding, then the amount of equity could reduce potentially to about 10%, 15%. Then the requirement is less cumbersome for youth-owned entities. Okay. So as we've discussed, the provision of equity can be a challenge. So in instances where an SHI approaches the NHFC to say, NHFC, we are a youth-owned SHI, we've identified a project opportunity, then the NHFC could say, look, SHIs, you don't require any equity. So such a product again can be an easy spot for such entities to say that, why don't you go through the SHI route? Probably a team of professionals to say that, look, we've got skills in accounting, in financial management, in architecture, civil engineering. We've partnered together and then we formed such an SHI. We've been accredited as NHFC. Please, can we have senior debt funding to top up on this equity funding that would have been provided by the SHRA? Then the NHFC can be able to participate in such instances. Again, the NHFC is then able to assist applicant in drawing up founding documents where you find that such skills are lacking, probably a building fund, a building club that has been established, either a stockful to say, NHFC, please assist us with drawing up of founding documents. The NHFC is also able to assist. There is also an incubation program that is now available at the NHFC. So you can say, look, Lindo, I would like to be part of this incubation program. Then you will be enrolled for such, and then you are able to be taken through the application process. And then obviously the requirement can then be able to be less cumbersome because you are part of the incubation program of the NHFC. Okay, you can move on, Luciba. So this is just a case study where the NHFC has basically been able to participate in a certain development. So the name of that applicant is Ali Road, 100% black owned. The NHFC initially provided debt funding in the year 2012. So since then, the NHFC has been able to make sure that this particular applicant has been able, from the initial 119 units, it has grown to about 900 units. So this is incremental growth that we also want to see more youth entities go through this route to say that, look, probably your first development does not need to be as big. Probably you can start with about 119 units. This one in this instance was in 2012. It was 119 units. So over this period of time, another development that they've done was 20 units. It was in Don Park. Another one was in Delmas. Another one was Durban sectional title. And then they've grown over a period of time from 119 to about 900 units. So this is what we want to see more. And that is why we are having this engagement. And look, we are open to suggestions, as we've had indications to say that, look, we can come up to some arrangement that to say, as the NHFC, we are working together, we can have some memorandum of understanding between the two entities so that we can make sure that the youth is able to participate and we are able to see the transformation of the sector. I think if you move on, it should be the last slide that is there. Yeah, thanks a lot. So Luciba, I will get my direction then from you. So that is what the NHFC has on offer today, and we are happy to take questions from colleagues and then be able to clarify or elaborate on any instance where such is required. Thank you, Luciba.
Thank you so much, Lindo. That was very informative. I'm sure our members enjoyed that as well. I'm just gonna start with some of the questions that I've seen pop up. So the first question was about the slides and the recording. You've answered that. You will send us the slides and we can make it available to our members. The recording will be on our YouTube page. So just look for YIPA on YouTube. The recording will be made available on there. And now on some of these more technical questions, I'll start off with one that says, how much of the company needs to be black owned for it to qualify for an application?
Okay. Look, what the NHFC typically looks at for BEE entities is to say that you are having a level 1 up to 4. Ne? So probably if you're a startup and even if you're 100% owned, you can be able to qualify for between level 1 up to 4. So we typically would look at about 51% Black ownership as a requirement, to answer your question. But I'm not saying that others would be excluded, but you are saying that for those that are BEE, but you are between level 1 up to 4, anything over and above, to say that probably you're on level 5 up to 8, you must submit to the NHFC a BEE improvement plan to say that over the next probably 5 years, so you can be able to access funding, you are required to have a compliance level to be able to access funding from the NHFC. So you are required to provide a plan, and that plan would be implemented probably in the next 4 or 5 years to be able to get that company to a compliant level. But you're not excluded. You can be able to still access funding from the NHFC.
Okay. And then an interesting question was, I also had this question was, most of your funding is development funding. Do you do any funding for acquiring the land, or is it a requirement to have the land going forward?
Look, yeah, that's definitely something that is always a tricky one. It is always preferable that the particular developer already be owning the land. But in instances where, because some sort of, as professionals from the built environment, many would appreciate that for a project to have some sustainability, 100% debt financing can be a bit tricky to make sure that it's viable over a period of time. So a reasonable proportion of equity is required. So probably not the full land. The NHFC can be able to top up, but there must be some contribution that is being made by that particular entity towards equity. Probably if the land is being made. So in other instances, obviously the land could be much cheaper. We also do partner with the GPF. The GPF is able to provide junior funding in other instances of about 30%. The NHFC provides 60%, and then the equity requirement then becomes about 10%. So in such instances, you see that the risk is spread across many parties, and then the equity requirement is then substantially reduced.
Speaking now specifically about those amounts, what is the minimum amount you guys are willing to fund?
Okay. According to our credit policy, the minimum loan amount is about 2 million. Okay. So anything above 2 million is acceptable to the NHFC.
That's good to know. I'm just moving to the Q&A questions now. There's a question on the buildings in the JHB CBD. I don't know if you've answered this though, asking if you assist with acquiring the building or just financing the development. I assume this is if it's already a residential building and there's not too much development or refurbishments that need to be made. Would you guys still fund that purchase of that building that's already running and already providing units?
Okay, look, it would depend on probably if it's a refurbishment and the structural engineer probably has given a go ahead to say that this building is still habitable. But it must always be remembered that the NHFC mandate is to make sure that there's a creation of new housing stock. Okay. So it must not be an outright acquisition. An outright acquisition, the NHFC would not finance. To say that there's already a structure and it's already for housing purpose, and people are still residing within that structure, then the NHFC would not participate. But probably taking a structure that has been evacuated, there's nobody residing there, and then you've identified it, then you would like to refurbish it, and then be able to then make sure that you receive rentals from it, the NHFC would consider such an application.
I hear you. I've got two questions, one specifically about specifications or standards on the developments that get put up or the refurbishments that are made. do you guys have specific things that need to be in the developments, like maybe sustainable or green features, or is it purely the basic standards that are government standards of housing, or do you guys, are there special requirements?
Look, in this day and area, obviously people are requiring more convenience, probably smart cities and so on. So it's something that we are not blind as the NHFC to. So such initiative by the particular developer, probably you've had innovation, you are having some energy efficiency within that particular development, meaning that the people are able to save cost. It makes your development competitive. So the market study, that way it comes in to say that to be able to adequately compete in this sector, the need to be over and above. Probably you cannot just be providing brick and mortar. There need to be some other supporting environments that you are able to provide within your development. Green living is the way to go. So such gym facilities, probably if you are going the student accommodation route, to make sure that your development is appealing to people that want to reside within your development. So it's something that is definitely warmly welcomed at the NHFC, to say that you've gone over and above typically what is provided in the market to make sure that your development is appealing. So it's encouraged.
So basically, I'm leading into another question now, which asks about mixed use developments, and if you guys actively fund those, or do you have a limitation of how much you fund the non-residential parts, or is it just one unit, one development, and you fund it as one thing?
Look, it would depend how much of or what proportion of that particular development would be for non-residential, because the NHFC mandate is typically for human settlements. But take instances where the first floor, it's for commercial space, and then the remainder thereof is residential. So there would be some subsidization. Probably you could be required to say that you can use your equity for that portion, and then the NHFC portion could be used for the residential aspect. So it all depends on the motivation. So yes, typically the NHFC would finance, but only a small proportion for such, because our mandate is strictly for residential.
And then how many times can you apply for funding?
As many as you want.
Okay.
As much as you want, because what you want to see probably is people that would have incremental growth. Probably for the first loan, we can look at a smaller loan amount, and then as you grow over a period of time, you can be able, so as many as you want. So it depends on the track record. So it's important that whatever project that you put through to the NHFC is sustainable, and then you are able to make sure that you maintain a good credit record, so that in future, it goes back to the slide about sustainability, to say that you want to see Black entrepreneurs come into the sector and then grow in a sustainable manner that is able to make sure that they are able to access funding. So probably with NHFC funding, you can then be able to approach the DBSA and say, GPF, DBSA, I've been approved by the NHFC for my first loan, I'm performing, but in order to leverage my growth, I need to get other funders come into my project, and then you are able to grow, come back to the NHFC. And probably something also worth mentioning, the NHFC has what they call an obligor limit. And obligor limit is sitting at 10% currently, meaning that any one entity can be able to access from the NHFC about 600 million. So now this 600 million, you don't achieve it in one day, over a period of time, to say that the maximum amount of loan, 600 million.
Okay. That's great to hear. That's actually very nice to hear. Then I've got a more technical question, which maybe you can help with. It's the interest rates and durations of the loans that you guys offer. If you can give us a little about that.
All right. It would vary according to product. For social housing, we're looking at a 20-year loan that is having an interest rate of prime +1. And then an initiation fee of about 0.5%. That is it when it comes to cost. So that is the turnaround. So 20 years. Private rental, 15 years, prime +1. And okay, probably also addition to social housing, there is a requirement of a debt service cover ratio of 1.1 by year 3. So meaning that whatever income that you generate over a period of years must be able to cover your expense 1.1 times. So meaning that then you are generating sufficient revenue for your project to be able to be sustainable by year 3. So obviously by year 1, you'll be still tenanting, you'll be still probably not finishing the development, other units are not completed, but you are still moving on. So that one is 15 years, prime plus 1 and the 0.5. Yeah, 0.5% initiation fee. Affordable housing, that's where you're going to be building and selling. So the turnaround time is much quicker there. It's about 3 years because you construct and then you sell. So if there's a demand, obviously within 3 years, you would have sold that particular development. With subsidy housing, that's where you've been given a tender. Typically, on receipt of, if the project manager of the government has saying, okay, your development is, or your roofing or whatever milestone that has been set, probably your substructures, your foundation levels have been ticked off, they are compliant, the NHBRC also give a compliant, then they are able to pay within 30 to 60 days. So the turnaround time for such products is much shorter. It would range between 30 to 60 days.
I've just got 2 questions that I know you answered during your presentation.
Okay.
One asks, does the loan need to be reimbursed?
Yes, it definitely needs to be repaid so that you can be able to leverage and are able to access more in future. So it does need to be repaid.
And then if all the application requirements are done quick or done smoothly, what's the quickest turnaround time for the application process?
So meaning that the market study is there, the feasibility model, company registration documents. So within about 2 weeks, you'll be able to communicate to say that your project is feasible. So you are able then to move on. So within 2 weeks turnaround time. So it's about typically 10 working days, you'd be able to have received a response from the NHFC. So within the 2 weeks, also worth mentioning is that there would be response to say that we see that your construction cost per unit are sitting at X. Can you justify why probably they are so low? Probably there are quantity surveyors here. They can tell you that to build a 45 square meter apartment, it shouldn't be anything less than 400,000. So if somebody had to come with the construction cost per unit of about 300,000, then you must justify to say, how do you achieve that? You know, so there will be interaction within these 2 weeks.
I've got an interesting question here also that
okay.
About micro developers, specifically how they're probably working on projects valued between 500,000 to 1.5 million, and your guys' minimum is 2 million. So the question is it possible to fund a package of these projects to meet the 2 million threshold?
Look, it is possible, and in instances where probably if there were subsidy housing, for subsidy housing, I know that they do go as low as 250,000 rand. That's their minimum. So for other product, probably it's much higher. So we are able to say that provide accommodating those people that have loan sizes that are much smaller. But take instances where somebody is saying that I have a need to develop my backyard. There's also an entity that is partially owned by the NHFC. It's called TAF, Trust for Urban Housing Finance. So they are also able to assist in other instances where it's micro loans, to say that it's a small development, probably it's 1 unit. Then they are able to assist. There's even a product that they call Umastand. That's more for your landlord that are still at the micro level. Probably as you grow over a period of time, then you are able to approach the NHFC. So there is always a way that if your project is a smaller size, we can be able to refer you to one of our related parties, so to speak.
And then I've got an interesting one. I don't know about this grant. I hope you do. It's they ask the Neighborhood Development Partnership Grant. Does it still exist? I'm not sure if you know about it.
I'm not aware. Who was offering probably? Do you know who was offering that neighborhood?
I'm not quite sure. It's just a question here, and they were asking if maybe the NHFC plan to collaborate with them. But obviously, YIPA will look into it, because he also asked if YIPA could organize a dialogue I guess maybe with them, we'll look into that. But
yeah, you look, and also probably it's just that we've also been attempting to reach out to them, the National Youth Agency, Youth
oh,
Development
sorry,
Agency.
this is they say here it was offered by Treasury at some point.
Treasury. I'm not familiar with that to say what were the conditions associated. I'm not familiar with that. But you said it's the nation, it's the
Neighborhood Development Partnership Grant.
Neighborhood Development Partnership Grant. Okay, I'll definitely check it out. And we have been attempting really very hard. It's just that we've not been able to be successful with the NYDA. You know, so it's something that we are still looking forward to make sure that we establish this, and then are able. I saw a question pop up regarding equity. We still need to make sure that the NYDA is also able to come into the party and assist the youth, because with 100% debt funding, the quantity surveyors within this platform will tell you to say that 100% gearing does not work out. So there need to be some junior funding that is on offer to make sure that these projects are able to reach sustainability. So we are willing to partner with other developmental finance institutions. We've already partnered with the GPF and are able to make sure that, as you've seen in the presentation, there is quite substantial that has been achieved with the GPF. So we are willing to partner with other co-funders.
Thank you, thank you. And I had also a particular question on rental subsidies. I just wanted to clarify: is that the NHFC subsidizing the people who'd be renting your development, so subsidizing their rent?
The subsidized housing, social housing that I assume that you're referring to.
Yes.
So it's basically the government, so to speak, to say that the government is subsidizing the people that are residing within these developments. So that's why they give the construction grant, so that the debt for such an institution is not as high. Okay. So it's basically government subsidizing. So you find that sometimes the minimum rental, probably it's 800 per unit, depending on the size of the unit and so on. So it's just the government subsidizing the rental community.
I get it. I understand what you mean now. Okay. I think we've gone through most of these questions. I'm just sifting through all of them to make sure I haven't missed anyone. There's a few coming in now. They asked, do you have any specific initiatives for persons with disabilities, specifically just them?
Look, it would have to be partnered with people from disadvantage. So that particular basket is also resonating to them as people that are disadvantaged, persons living with disabilities. Yes, they will be accommodated between that land. So with BEE, it does make accommodation to say that these are the previously disadvantaged people living with disabilities, Black people, women, and so on. So yes, they are also prioritized individuals within the NHFC.
I think we can end on this last question. I'm not seeing any more new ones come in. Okay, there's another one there. But again, second last question. Specifically with how you guys are now going to start offering new services and professional services. There's a question asking for startup developers or investors who don't have the necessary background in property. Are you guys able to provide or even just recommend specialists or professionals that could help in that feasibility stage? I guess those CVs for those key personnel. You guys have been able to link those two entities?
Within the incubation, probably something very important is that one definitely does need to ensure that whatever field that they want to enter into, they have probably some background knowledge concerning. Probably if tomorrow I wanted to do something, it's incumbent on myself to make sure that I do proper research, and then I'm able to say, okay, this is what is done in this particular sector, research. And then when you approach the NHFC, you are having something as a background to yourself. But there are instances where such is lacking, and we are able to take those under the incubation program. Probably you will be taken through the program, and then you are able to see if you do meet the minimum requirement to be able to access the product.
And then I think now this is the final question. Is the 80% funding for the total project costs, i.e., acquisition, development, professional conveyancing, or do you guys limit or cap it to specific things?
No, that's for the total capital outlay. So it is for the total development cost. So it is total capital outlay. Yeah.
Okay, that's fantastic. And also they want to, do you finance individuals? So not companies, do you finance people individually?
No, not directly, but with the finance-linked individual subsidy program, that's the only program that where the NHFC is financing people directly. So probably as Ulindo, I want to buy a house. It's my first time buying a house. I want then a grant to be able to assist me in improving my affordability levels. If I'm earning below 22,000 Rand, then I can be able to qualify for the subsidy grant. So basically the starting point, you start at the bank, how much can you approve me for? They'll tell you that pre-approval, you're qualifying for 400,000. NHFC, how much can you pre-approve me for? The NHFC will tell you, because you are earning so much amount, then the NHFC can give you such a grant amount. So the NHFC, and there is a grant subsidy. You don't need to repay it in any instances. So as long as if you qualify, you're a first-time home buyer, you're a South African citizen, never previously owned a house, you've never benefited from the RDP house program, you'd like to access the funding from the NHFC, you are welcome to access such a fund from the NHFC. So with directly, it would have to be through Mastandi, through a related party to the NHFC, where you're a landlord, you'd like to acquire a stand, you'd like to acquire, but they have areas that they've demarcated to say, as the TAF, we are only able to lend out to people, probably they've said Soweto, where they've done their study and they know that there is an adequate demand, probably in Cape Town, City Center, in Durban. So they have their areas that they say we're only financing or we are only focusing in these areas.
Okay. And then, okay, I've been saying we're ending, but finally.
No, feel free, my brother. You can shoot the questions.
On the incubation program, how do you apply? Is the program currently on, and are there entry requirements? And also, how long is the program?
Look, the program, it's not time frame specific. It is currently on. It is still new to the NHFC, so it's still definitely going through the process. So probably if you're an aspiring property developer, it's something that is worth aspiring to join. And then I can be able to share with you the email address for the contact person that is responsible for the incubation program.
I think that would be useful.
I'll do so.
I think if any members want that content, I think email us on our email. We help through our different channels. Yeah. So I think we can wrap it up. And call it a good workshop. We've tried to answer, I think, all of these questions. There's still questions about the recording. The recording will be on YouTube, so go watch it there. As soon as we're done, it will get posted. Yeah. Is there someone asking a question?
I just one more.
Sorry, I can't hear you.
It's 5, and I wasn't.
Sorry, I can't hear you. I think we're gonna call it there. Thanks, guys. Thank you, Lindokuhle. Thank you, NHFC. Yeah, this is from Yipa. Enjoy your evening. Thank you, guys.
Thank you.
Thank you. Where do we apply?